mortgage rates actually headed in the right direction. This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm a mortgage broker powered by Edge Home Finance. If this is your first time to the channel, we do welcome you to like, comment, and subscribe as we post information every single week about what's happening economically and what may be affecting your home buying or your home selling process. And this is actually good news. And it's the first time that we've seen some sort of good news about mortgage rates probably in about 6 months. So let's go straight to the charts here. You're looking at mortgage-backed securities. If you follow this channel, you know that there's an inverse relationship between mortgage-backed securities. As this line trends up, interest rates are going down. And as this line trends down, interest rates are actually going up. So we see the last 5 days of mortgage-backed securities, this line has trended up, which means interest rates are trending down. Now, let's not get overexcited. Are we back into the fives, back into the fours? No. But we may have turned the corner. As I told you last week, I do expect mortgage rates to remain elevated throughout the rest of the year. But now we're starting to see some things that really may indicate that we've topped off on inflation. Now, we're still waiting on CPI numbers to come out next month, reflecting what happened in October. But I'm telling you, this looks pretty promising, at least for the time being. We're still in a very volatile market, so any bit of information could reverse things and send us down and send mortgage rates higher. So let's look at where we are. Let's throw out the screenshot here from Mortgage News Daily. And I've told you before, this is not my actual mortgage rates, but this is a good place for you to look and see generally where rates are. If you're a realtor, if you're seeing things for your clients, you can share this with your clients. This is not where my rates are because there are many different factors that affect the interest rate, and I'm shopping among 40 different banks in order to find rates and programs. But this number, if we look at the 30-year fixed number, that number at the top there on the left, if we look at that number was at about 7.3 at the beginning of the week. So as an average of mortgage rates. So pretty good, heading in the right direction, and pretty good to cover that much ground in about 5 days. So what's feeding into this? Now, number one, we see this story, and Powell is again facing political pressure. Senator from Ohio wrote him an open letter and talked about really his need to balance inflation with jobs and the need for the American people to still have jobs. And he has said publicly that he is okay with fighting inflation and letting unemployment rise, which we all know that, and he really wants unemployment to rise to give us a more stable economy as far as growth is concerned. But this senator wrote him an open letter and said, hey, you cannot do this, or really he said, you want to make sure you're balancing this. He did not say anything that says to try to influence, but he just was reminding them in an open letter. If you remember, during the Trump administration, Trump was very admonishing of the Fed for increasing the federal funds rate. In fact, he equated Jerome Powell to, at the time, the president of China, saying, we don't know who our real enemy is, whether it's Jerome Powell or whether it was China at the time. That's what he said. So, this is the first time he's really gotten any really admonishment and stuff over the actions of the Fed. And he was still really telling them, hey, the Fed may be doing too much, too fast before we see the results of the actions that they're actually taking. This week, we also got PCE, which is Personal Consumption Expenditure. So PCE measures manufacturers and how much manufacturers are feeling the effects of inflation. Now, that number came in high. So you're going to see some articles that say, hey, inflation is still hot according to PCE. Yes, that number is still high, but the rate of that number year to year looks a lot better, which is why the markets went down a little bit when we got the PCE, but really as a whole kind of kept trending along and mortgage rates kept getting a little bit better, we did not see this massive reaction to PCE like we have been seeing the last 6 to 7 months, because investors saw like, hey, inflation is still hot, but it's really not, the growth rate is not as bad as it was. So that part is really, really good news. And I go back to the story where Powell was admonished for the actions of the Fed, maybe doing too much too fast. And I think people were kind of imploring him to take the stance that other countries have taken. If you look at Canada and Australia, both of them in their central banks had expected to increase the federal funds rates by 75 basis points and 50 basis points respectively. They then backed off of that and said now they're going to hike 50 and 25 basis points because they are afraid of doing too much too fast, and people are trying to get Powell to see things the same way. Australia was supposed to hike rates by 50 basis points. They said, hey, now we're going to hike rates by 25. Now, next week, I do expect the Fed to still hike basis points by 75, because really as a whole, Powell has ignored all political comments and anything, and he's like, look, we're going to do what we're going to do, and politicians are going to do what they're going to do. So other countries are actually starting to take their foot off the gas regarding interest rate hikes and say, wait a minute, we need to let this thing settle out so we don't push our countries into recession. And people are trying to tell Powell to do the same thing, which most economists have been saying, this is going to happen anyway. So I do want to let you know there's a lot of news coming out this week. There's a lot of news coming out next week. There's news on jobs. There's news on the jobs report. If we get the jobs report probably around 200,000 or so, and we get unemployment to tick up just a little bit, you're going to see interest rates continue to look better and better as we hopefully start to see some leveling out. So our eyes will be on that pretty stiffly this week to see what those reports say. I do want to let you know, I'm trying to highlight some things or different products that we have available. Number one, to get people into homes, and number two, for you realtors out there, to keep you in escrow and help you save your deals. And this program right here that we partner with Change Wholesale on, and this is what I call the escrow saver. So this program is for a primary property, and if you have 20% down, and if you have an issue with DTI or employment or something like that, you have something that's fallen out of escrow, this program is certainly something that we can use to help your client get into the home. And then we'll worry about refinancing and restructuring later. This is what I call the Band-Aid loan. I got a problem, I need to put a Band-Aid on this problem, close, and then help my client refinance later. There's no income documentation, no income calculation, no DTI, no employment verification. You don't even have to have a job. But this gives the client an opportunity to get into a home. There are required reserves. There is a 20% down payment. But if you have a well-qualified buyer that just has something weird going on with their income situation right now, we actually have 3 buyers that are using this program right now to buy a property and then refinance later. The interest rate is slightly higher than a conventional loan, but really interest rate matters the longer you're in it, and we're not planning to keep people in this product long. We just want to close, get them to the closing table, get them into their home. Then we'll structure a refinance a little later on. So if you need more information on that program, be sure to reach out to us and we can have that conversation. It's a packed week of information, but we are headed in the right direction on interest rates, and that's very exciting. Let's see if we can keep it up next week. See you next time on Major Money Matters.